Shifting our attention over to the grain markets, this week we were joined by the president of Heartland Farm Partners, Jeff Peterson. We began that discussion with Jeff by getting his take on the current trajectory of the grain market. Joining us now to discuss the markets is Jeff Peterson, the president of Heartland Farm Partners. Jeff, always great to have you back on Market Journal.
You bet. Always enjoy being here and talking about the markets, Bryce.
As we began the week, it seemed like there was a plethora of bullish news to drive this market higher, but that's not what happened, especially on Monday. We saw follow through with that on Tuesday. What's going on with this market right now that was led us to some downward pressure there to start the week?
Well, I think the biggest thing you look at in here is that you have to think about the markets built on perceptions of what's going to come, and we've built in a lot of bullishness. We've ran this market up, and we do reach a point when we can't. It's hard just to feed enough extra news, and then we ultimately end up getting some profit taking there, where the traders do step in and try to take some profits off the table that they physically made when the market's been going higher. So I would sum that up, and because we've got so many different parts of not only the U.S. but across the world that's impacting where the markets are going, that's what we'd pretty much see, Bryce.
You mentioned a word there that a viewer chimed in and asked if I could ask you about this. That's profit taking. For someone not familiar with what that is, bring us up to speed.
Yeah, the easiest way probably to describe the profit taking, so think about it this way. When the market's working at higher, you've continually got traders, and usually we call them kind of the managed money, and they're just trying to pick a trend, and so they're continually buying the futures as we're going up higher. And then at a certain point in there, when maybe they think the market's peaked out, or maybe they think there's a risk that it's going to turn, then they're just going to offset their position or sell back that long that they had purchased, and that's where we come up with that term profit taking. Now, we talked about a situation when the market's going up. You can have profit taking when the market's going down, but instead of physically, selling to have that profit taking, if somebody, and you've got a market going down, they just physically buy back that contract that they sold.
Well, as we look at these markets this week, Jeff, a lot of planters are parked in the shed due to some widespread rain we've seen, particularly here in the western Corn Belt. That was certainly welcome for producers who are facing drought conditions, but leaves time to think about how much, for the producer out there, how much worry should we be setting on the fact that planters haven't really been rolling at the pace that some people are used to at this point. Your take?
Yeah, it definitely is. We're getting closer to it being a concern. The market's starting to pay a little bit more of attention. From our side of it, one of the things we're watching, we know we've got a WASDE report coming up on May 12th, and we're really curious to see what USDA does on the yield side. And as we dig in and look at that yield side, a couple things from the past, we're at 14% planted right now. If we look back in time, back in 2013, we'd actually only been 5% planted. And coming into the May report back in 2013, they actually lowered the yield from the outlook meeting to the May yield down 5 bushels. Now in 2011, what was interesting, the yield, or the planting progress was 13%, but they still lowered the yield 3.6. But then to throw a curve in all that, in 2019, when the planting progress for this week was only setting at 15%, there was no adjustment. So there's enough uncertainty there, but that could be a surprise to the market if for some reason NASS did adjust that yield coming into this report.
We talk about planting progress here domestically, Jeff, but also want to ask you what you've been able to learn about planting progress in Ukraine, what they've been able to see thus far.
Yeah, they're moving along. What it kind of looks like, and I'll kind of break it down this way, Bryce, is that overall for their spring planted crops, and if we just look at how much they got planted versus what they planted last year, on their spring crops they'd be about 38% planted. But if we dig in a little bit deeper and look at the corn, based off of where they're at right now versus what they planted last year, they'd be sitting at about 23% planted. They're running a little bit behind where they were last year. What we're hearing overall is that they've got enough seed, fertilizer, and chemicals. If they haven't got it bought and placed on their farm, they can still get it. But what we do know is they aren't going to get everything planted that they did last year, mainly because probably in the occupied areas or where you've got some fighting going on in the war between Russia and Ukraine, there's probably 25 to 30% of the acres in those areas that won't get planted. So, we're probably going to come in 65% planted of last year. So that's what it looks like right now.
What do you know about the stocks they currently have on hand?
Yeah, the stocks on hand are gradually moving some bushels out. To give you an idea, when they were peaking out, they were probably able to move about 6 million metric tons per month, maybe even 6.5 million metric tons per month. But now, honestly, they're down to moving about 600,000 metric tons per month. And they're doing that by rail, where before they were railing it down and sending it out the ports. The other side that gets interesting actually is how it's having an impact on their sunflower crush industry too. You know, they're the #1 exporter of sunflower oil. They used to, before ultimately this war happened, they were crushing about 1.5 million metric tons per day, and actually now they're backing off to running about 300,000 metric tons, and that's, excuse me, that wasn't per day, that was per month price.
As we wrap up today's conversation, Jeff, obviously there's a lot of factors in this market right now, but what kind of risk management advice would you like to leave our viewers with today? You
know, we've got a lot of uncertainty in this market, and I think this is the type of market where even though it feels like it can keep going higher, and we don't think we've seen a high end, we also have to recognize that we do need to be making some sales, and there's nothing wrong with physically making some sales, putting a call against it, or just buying a put against bushels as a way just to get a floor underneath it, because these are good prices, and our biggest risk that we physically don't want to have is have some surprise, and that's what we know we're going to have. We're going to have a surprise out of somewhere that will turn the market over eventually.
It's not if, it's when, it sounds like. Jeff, always appreciate you coming on the Market Journal to share your insights.
You bet. Always love doing it.